4-day losing streak, some big winners, some big losers from yesterday. Mixed market. January effect kind of holding up early, but not late. This is a mixed market, folks. Some economic data, 8:30. Tony Pawlawk, 8:35. No deal in the steel industry for now. Let's get fired up for this Friday's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We got some green on the screen here. Let's recap the commodities and futures and then get on with the show. You don't want to see CEG. You want to see the S&Ps trading up 16 and 3/4 handles, 59, 33, 75. As I said, trying to break that 4-day losing streak. The buck in the red by 40 cents after a big run yesterday, 108.80. TLT, that's climbing. That's up 51 cents at 88.08. USO flat 78.92. GLD flat 245.35. Silver flat at 26.99. And Bitcoin futures, good day yesterday. Giving a little bit back today. That's down $715 at 97,475. Let me stop the screen share. Let's bring on Triple D. And what I used to say Triple D and AB, but I don't have anything that rhymes with
CF.
CF. Now we gotta get a. We need a
Triple
better
D and
nickname.
AB. It didn't really totally rhyme there either. And people have been asking about AB. AB is still with us part-time, but again, we're zero revenue right now, so it's difficult to pay people. So me, Joel, and Christian are working for nothing. AB is tapping in when he can, but obviously his bills to pay too, so we have to respect that as
Christian,
well. So AB is still with us part-time.
Christian, did you have any nicknames as a kid?
Oh boy, we're gonna go down this this road. Oh, my last name. You could do a lot of things with my last name, so I'll give you some hints there. You can call me From. You can call me,
Frommy?
yeah.
The
Well, that on the that's.
How about the Fromster?
Man, you didn't like that one.
All right,
Hans.
All right, let me think about it. I'll come up with something good. Yes. Dennis, what picture perfect day, January effect, everything did exactly what it was supposed to do.
Kind of out the first 30 minutes, and then it was all over the place. So in the first 30 minutes, January effect working very well. At one point in time at 10 o'clock, and we talked about this January effect, all 25 of your biggest losers in the S&P from last year were green at 10 o'clock. You had stocks like WBA popping 3%. You had, Solar Edge was up over 12% at one point in time, actually closed fairly strong. But then they started to leak, and the whole market started to leak, and everything just started to come out. And you saw profit taking in the names from last year, which was to be expected as well. So it kind of worked the way you would think it would work, but a lot of names gave a lot of the gains back. Now, solar held up very well. To Christian Fromhertz, he was saying this in the pre-market. TAN had a pretty darn good day. First Solar had a pretty darn good day. SEDG, pretty darn good day. ENPH, pretty good day, although it kind of gave a lot of it back too. So you had the solar names holding up fairly well, and they were dogs last year. But then you had a lot of other names that were dogs last year, like Boeing was green for a bit, and then they just pulled the rug. Nike, green for a bit, and then they just pulled the rug. I mean, I guess once you're a dog, you're always a dog. You'd hope they'd get more than a 30-minute rally, but they really couldn't muster anything up. So, I mean, mixed results on the January effect from yesterday.
Yeah, and I think we were all over the place too. I mean, I think what we talked about too yesterday, just like a little bit of the strategy going into the first trading day of the year, and trying not to chase some of those moves where you mentioned CEDG. Yeah, I was like, wow, these solar names, they went off really quickly. But I wanted to see things kind of settle in a little bit and see, because we're talking about a couple names where they were up and then down and then up and down, and like that's not easy to kind of trade, and you don't want to get yourself off on a bad foot, right to start the year. So I liked what we said, as well as Jim was on, our guest yesterday. Jim was like, "Hey, no rush, and you kind of just let it breathe a little bit." And we kind of saw how things evolved as back and forth, back and forth. But that was really, like, if you're an really active trader, I thought that was tough price action yesterday.
I
Well,
think it's, again, go ahead, Joel.
I was just going to say you had two very unusual, I'm not unusual, but two things that you just weren't expecting, right? Apple, what they're not, no one's buying iPhones in China, right? So that's that was unexpected news. And then the Tesla deliveries, Dennis, you were spot on with your nervousness about the market. So when you have two of the top, I don't even know how far Tesla is up now, 5, 6, 7 components of the index under that much pressure, it takes so much heavy lifting from everything else to have a green day. So if those just would have had like normal days, or what's a normal day? Up a buck, down a buck, something like that. I think that kind of skewed the overall market having those two big stocks in the red so much.
Oh, for sure. And that's why, even with the January effect, I kind of wanted to wait to see what the Tesla numbers were going to look like. And then, I tweeted out right before the open. I said, a lot of the Momo names may actually follow Tesla here. So just be careful on those names. And I showed a Palantir on the open, PLTR. And it dropped, like, I didn't get the whole move, but it dropped 4 points in about 10 minutes, like straight down. So there was a good opportunity if you're just using those relationships there to take advantage of. Now, again, buy the dippers emerged. You just can't take them. They're so hungry for these stocks, and maybe even institutional money managers, that are like underweight in these names, that every time they get a dip, they seem to get bought again. But, App 11 was the same story. It opened up about $10, and within like 10 minutes was actually red. So it gave back $15. Eventually, they came in and they bought them again. But there was a good short opportunity that a lot of stocks tried to follow Tesla off the hop. Apple had a terrible day. Maybe we should.
Hey, Dennis, can I just go back to the Palantir for 1 second? Just from an execution standpoint, because I think, one thing, people like to know your execution strategies. I mean, getting in, you have your strategies, but, something like that, a super hot stock, you short off the open. Let's just say you have like 100 shares,
Sure.
and the reason that is like 20. Do you just like? I know you don't have time to look at the chart because you're looking at like 87 different things. Do you just go out at like half numbers and whole numbers?
Yeah, you can.
Yeah.
I don't like to usually put my orders out there at all. So this is an execution, and we've done some lectures on this, and we actually have this on our pre-market prep site, some courses on this stuff on execution. We're going to do some more of this stuff, like I said, we've got some really cool stuff coming for you guys. We're going to be doing a lot of like execution tactics. One thing I don't ever like to do is show my hand, meaning if right off the bat, you're in full price discovery still. So, even let's say you were short 1,000 shares of Palantir, let's just say hypothetically, and you throw out 100 and 100. As you throw those 100 bids, there's bots that automatically penny you. So you're actually not adding 100 bid to the market. You're probably adding a 500 bid to the market because the bots will lean on your 100 shares. So once you put the 100, then more bots come in front of you. Now, you might all just get smacked out, but you're giving support to the stock in a stock that you're short and you want to go down. So I'm more of a fan of not necessarily taking liquidity, lifting the offer, but you can use midpoint orders, which we don't talk about a lot. But you can use, midpoint orders, and institutions use these, and lots of traders use those. If you're on IB, you got those. Just use midpoint, and then what it'll do, it'll go to the dark, and it'll try to get you down at the midpoint. So if the spread's like 10 cents, try to get you down at the nickel. I mean, I use midpoint orders a lot when I'm like in something thin. Sometimes if it's thick, just lift the offer. If it's a penny, lift the offer and move on. Palantir will be thin off the bat. It could be 20, 30 cents wide. So, it will thicken up after, but, it could be fairly thin. Remember, midpoint orders only work during the day. They don't work pre-market after hours. So just, keep that in mind if you're using them. But, that's an execution tactics. We can get into that stuff too sometime. But, we're going to do some more courses and stuff on this because I think people honestly screw themselves, by showing their hand way too much.
And I just want to Roger Furr's comment here. He says, "Good morning, guys, and thank you. I had 3 trades yesterday. IWM and TFF puts were both small losers, but but my UVX call made up for it. Green Day. It's taken me over a year to learn how to lose well, or at least better. And I mean, you guys, I think that's something that we stress, all the time. If it's old, momentum trading. If
For
you could
sure.
just, if you could, Dennis, I mean, I think that's one thing where, you could write 5 books on, is getting out of losers. And the other thing too is like, you don't have a regret. Like when you take something home overnight and you get smacked around, you just work out of it. And you say, you know what, whatever it does, the remainder of the day, boom, it's out. But I'm sorry, I
I
just
mean,
wanted to bring that in
that's
there.
easy to say, Joel. Again, we could ask Christian about this stuff too. It's always easy to say you don't have regrets, and you try not to have regrets, but you do. I mean, it's natural human tendency when you sell a stock and it goes up 5 points after you sold it to be like, I screwed that one up. So that's natural human tendency. So you're always going to have regrets. It's like mentally training yourself to like just accept it and move on as best you can. But it's there. I mean, Christian, you probably have this all the time too. I mean, it's natural human tendency, and again, I've said this for myself for years. I'm very good at the entries. I feel like I'm excellent at entries. On the exits, that's an art. And people ask me, well, how do you get out of these things? I'm like, it's like working out. It's like, it can be very difficult, to get the whole move and be satisfied with your trade. It's like hit your targets, put your targets in there maybe, and it hits your target, get out, and it keeps going through your target. You got to just move on. But exits are tough, Christian. What are your thoughts here? Just entries and exits, and then we're going to move on to some news.
Yeah, I think definitely, and I think the beginning of the day, I find that the direction could go any way. Sometimes you see the pops and the drops and Palantir. Like, look at the 5 minute on. If you could bring up the 5 minute on
Uh-huh.
Palantir, just for example, and then we could talk about the trade that I did yesterday too, which was I got into CEG, but just
Ooh.
the 5 minute in Palantir, it dropped $4, then back up $3.
Yep.
Then I mean, so that's really I think it was
Wild.
a good example of like how yesterday traded for some stocks. Is like very difficult with direction. And so that's why I kind of feel like in the beginning of the day, I feel it's very difficult. Like in the first 10 or 15 minutes, I learned just to scale down because I don't like when you get such whippy price action. As the day progresses and you kind of have a little bit more of an idea. Now you may miss part of a move, but things kind of settle down a little bit. And then I begin to kind of increase my position size on the entry. But just like so CEG, so we saw your uranium stocks were very hot yesterday. I think it was the best group yesterday. Um, I don't think that there was any major news until they mentioned the CEG. But just to kind of go through like my playbook a little bit, I saw solar and clean energy, which were hot a couple days ago, and then gave it back. And I started to see uranium, and I said, well, wait a minute, I have CEG on, that's on my radar. I was looking at that chart last week, and you notice that like it had that support there. I'm trying to look at your chart. I should really have my chart up there too, but it kind of came down, not a double bottom per se, but it was really holding this 222
Yeah,
223
on the
level.
top right chart, Christian. I get confused with the 3 chart system too, but people like it. We did a vote on this. They wanted to stay 3 charts.
Yes.
Top right, you'll see that double bottom.
Yeah, so I was looking at that support, and so that name was already on my radar. It had already started to move, a couple percent, and I said, okay, this is the stock that I want to be in this group because I had the chart like already in my head, and sometimes it's nice to I got lucky because the government announced a contract, and the stock's still running a little bit, but um I had a difficult time in the beginning too with like I was already scaling out a little bit after like a couple dollars. And what I try to do, because sometimes I do that, right? And just because in the beginning of the day I have a tough time knowing if it's going to be a pop and drop, or if that contract is big enough to move CEG, because I thought about that for a minute. I'm like, maybe that's not that big of a contract.
Right.
But so what I've tried to do is make my scaling out a little bit because I feel like I gotta lock in something. So I try to just make my scaling smaller and smaller so that hey, I'm making sure I'm locking something in as it rises, because I don't know that it's going to move as much as it did yesterday, which was a huge day yesterday. And then I ended up just holding a third of my original position, which again, probably not enough, but it's a technique. It's something that I think we all need to learn a little bit, or improve, is like how we're scaling out, as well as how you're scaling in too.
I'm with you, Christian. Like exits are always tough. We got Donk and Dave saying if you do an option, sometimes the exits are built in. That's somewhat true. I mean, when you're selling premium, you get called away, the exits built in. But there's also, points where, hey, I got 90% of the premium I sold. Do I want to profit or sit around for the last 10%? Some people would say never sit around for the last 10%. I mean, so there's always still an exit on the trade. It just depends on whether you wait for the actual call away or you actually wait for them to expire. So it's not entirely true either. Even if you're an options trader, there's still an art to exiting. But with equities, it's all art. It's all art. I've been a stock trader. I traded options for years too, so it's not like I'm just don't know what I'm doing on options. I was an options trader for a number of years. Not specializing on the floor or anything like that, but trading options, a lot. But equities are an art, and I mean, I think, with Joel's system always, putting in risk reward, whether it's 2-to-1 or 3-to-1, know what your risk first. Starting with your risk first is always a great idea. I mean, even when you're setting these things up, saying, hey, I see support here on the CEG at 220. I'm picking up at 223. If it breaches that support at 219, I'm out. So you're giving yourself $4. If you give yourself risk reward of 2-to-1, you'd be $8 out. That would be setting up an exit for you. But that's easier said than done. Sometimes it's better to just walk away. Sometimes you're up $5 and you're like, well, I don't want to give it back now, and you exit early. So it's still an art.
Well, that's a great the point that you're making there, Dennis, is and using Joel's examples to have that plan before you go into the trade too. That settles you down a little bit too. Sometimes I feel like we're all victims to this a little bit too, but I think especially newer traders, they get into a stock and they have no idea what to do. Like they're
Yeah.
thinking big dollar signs, whatever. But if you have that established, not only like so your exit both on the downside, because you always have to think about, hey, what if the trade doesn't work? Because the more that you think about where you're going to get out before you pull the trigger, you're already getting yourself familiar with, hey, how a trader work, how you think as a trader and how you should execute as a trader. Versus if you're not thinking about that and you pull the trigger and the stock starts to go immediately lower, you're like, oh geez, what do I do? And it's because you didn't have that set up.
Yeah.
So it's just an amazing point in terms of, hey, if you want to be a profitable trader, you've got to think you have to have a plan for each trade before you get into the trade. Whether it's Joel's technique, right, of talking about, hey, I'm gonna take this much off at this price. As long as you're establishing that into your own comfort level is so important.
I think also it really depends on like the timing, of the day. Like if like Dennis's trade, like you were like that Palantir, you wanted in and you wanted out. Like you weren't holding out for
Yeah, I
7 days
screwed
time.
that one up because it was 4 point. I should have just held for a few more minutes. But you
Right.
think you get a quick buck, and you're thinking, okay, that's nice, sympathy move here, and then you watch it fall another 3, and you're like, you know, got to sit back and I always exit too soon. It's besides the Tesla, maybe certain things in the trading portfolio, I always exit too soon. I get excited and you're like, you got some money and you're like, you move on. But exits are an art. So, it's tough to, have that to do it perfectly. You're never gonna do one thing, just to close the point, you're never gonna do the trades perfectly. You're never gonna absolutely buy the bottom and sell the top. There's a lot of money made in the middle though. So, just go for the middle. Don't worry about doing it perfectly.
Okay, got quite the tangent out of that.
It's good.
Where do we want to? But I think it's good. I mean, I think I want to emphasize these points, boy. But we got a lot of stuff to
Let's start with
cover.
US Steel.
Okay.
Scott News, we've talked about this merger getting blocked, inevitably getting blocked. Apparently, it is going to be blocked by the Biden administration today. So we don't have an official announcement here, although Bloomberg is calling it, I believe, an official announcement now. Like Joe Biden blocks, I'm seeing Bloomberg there. Christian, you probably get it just a few minutes ago. Bloomberg blocks Nippon Steel's proposed takeover of US Steel. So Bloomberg's saying it's official now. I haven't seen it elsewhere official, but it's been rumored all night here. So it looks like Joe Biden is indeed going to block US Steel. I'm actually impressed with how much US Steel is holding up on this. Just quickly, it's only down 7%. I think if there was no rumors of Cleveland Cliffs coming to the rescue here, the U.S. Steel would be down a lot more, because you just look at Nucor, which is best of breed, how much it's been killed. You can look at the other steel stocks, Steel Dynamics, Cleveland Cliffs themselves, killed. U.S. Steel is still sitting, at 30, where it was, just, a few days ago, when the rumors were going off. So I think the only reason this is holding up at 30 is because they think Cleveland Cliffs will come to the rescue. I'm not so sure they will.
Good call on this a couple of weeks ago, because I thought I was looking at 31, 32. I thought something may, happen with it. You did get some pops after that. I don't know why there was a pop on that. Let me try and figure out the day here on the daily. Today's Friday, so that's Thursday. So that would be on Tuesday. For some reason, that got a nice pop on Tuesday. But I mean, even if Biden didn't block it, Trump was going to block it, and
Oh, yeah.
yeah, using I mean, this was the reason you said hands off on it. I know another strategy you've talked about over the years is when there's a rumor on something and it takes off, and then things kind of die down. If it comes back down to that area where it was before the rumor, and that was it was under $28. And just and how many
It's
times have we
just
seen?
changed, though. So I want to just add to that point, though, but it's different now because you've had steel stocks killed
Yeah,
since, so you can say, oh, it's going to go back to where it was at 28, and you have a Cleveland Cliffs potential, so that's why you get a 30. But we're not discounting the fact that steel stocks have been absolutely massacred in the last month. So, I mean, I think Nucor should be at 25, because I don't think Cleveland Cliffs deal is coming here, because I think Cleveland Cliffs is in a worse situation than they were a year ago when they were talking about this. I mean, when this deal was rumored, that Cleveland Cliffs was going to maybe be the buyer. Cleveland Cliffs was $17, $18 stock. It's been cut in half. It's $9. Are they in the financial situation to go chew down a U.S. Steel here now? And I think if you get the CEO saying, we were interested in the 30s, but we're just, not interested now, I think X would fall another $5 if you said that. Maybe they are interested. Maybe it'll be a merger out of necessity because, they can cut costs, maybe some synergies. So maybe this deal is still potentially there. But Cleveland Cliffs is not in as good a financial shape as they were 6 months ago.
Can I make I'll throw this to both of you. Is this kind of like a bearish indicator here? I'm looking at Fastenal, the nuts and bolts of the economy. I mean, maybe there's a slowdown. I mean, right, for building, what do you need? For homes, what do you need? Steel. Do you think that this is maybe a little precursor that, maybe the Fed, kept the pedal on the metal a little bit too much, and this economy is going to be cooling off a little bit in 2025? Or, housing stocks too? I know that they've been on decline. Or will the market just rotate into something else, and then we'll be off to Never Never Land?
It's rotation. Christian, like we've been talking about this, like this is the rotation that we've been talking about, how the value stocks have absolutely been hammered. We've been talking about this. These are all value names. U.S. Steel, it's a value name as well, but we're talking Nucor and all those other names you just mentioned, home builders. These are PEs of like 8, 9, 10. They hate that stuff. There's not stories behind it. They hate that stuff right now. They're buying, the storied things, like quantum computing and stuff that, can trade 100 times sales, and we don't care because it's got a good story. They absolutely hate value. That might change. But right now, this is all just overall market rotation punishing value investors.
Yeah, and it's interesting. I started to kind of think too, like January effect in some beaten up areas. Like, so I think there's a couple things going on here because take a look at the XLB. That's the materials ETF. B as in boy, right? I mean, that's a group that's been absolutely hammered over the last month or so. The industrials have not looked very good. To Joel's point about like the nuts and the bolts and so forth, these things don't look pretty good. And like, look at the SLX. SLX is the steel ETF too, which kind of covers.
Oh,
Yeah, I mean, so
Ugly.
yeah, very ugly. So I think there's just too much uncertainty with the new administration coming in, and we don't know what the tariff picture is going to look like. These are the areas that there's too much uncertainty right now, and that's why they're like stair steps down basically right now. So I will continue to watch. I'm starting to like take a look at a couple of the industrials to say, okay, I'm watching to see if they start to turn up. Like I'm looking at TT is one of the names I started to look at yesterday. This is Train Technologies.
Mhm.
So I mean, I'm starting to think, hey, there's got to be a couple like hidden gems in here too. But I'm not going to be the one who's going to say like I'm not going to call the bottom. I'm going to wait for them to start moving up a little bit. That's a nice stock. This is a stock that had good earnings. So now is the time to start looking at some of these stronger names that have had dips, because we do want dips, but we want to see the dip being bought first. And so that's something that I think is very interesting. I just wanted to point out one other thing too, right? We've had is the S&P, was it down 5 days? Is it now 5 days in a row?
Four.
Okay. Now there's a little bit of fear. Like, if you look at some sentiment gauges, I don't know how closely you guys watch these things, but like Helene Meisler was tweeting about this, and hopefully we're going to get Helene on the show soon. But she was tweeting about the equity put call ratio. That's something like that. I'll say, okay, it's one of those factors that I kind of will take a look at from time to time. Is like, hey, if people are really starting to buy a lot of puts, that could be a contrarian indicator. So the equity put call ratio got to 0.8. We haven't seen a reading above 0.8 since the beginning of September. So, and for a while, this ratio, and again, it's a very noisy ratio, the equity put call ratio. But once you get some extremes in there, so, maybe some of these things that we've seen the rotation out of, and just maybe the overall S&P, maybe we're finally starting to get a little bit of fear that's coming back in, which I like. I like when people get scared. I like when CNBC has the markets in turmoil. Now, I don't think they do that anymore, but I like when that happens. And, I think 5 days in a row, or four, whatever it is, I think we're getting closer to, hey, maybe people are getting a little bit antsy. And, maybe we start to see the buy the dip mentality happen, and maybe it's somewhere in the value stocks. I'm still holding Berkshire Hathaway, and Berkshire Hathaway was green in the beginning of the day, went red. I'm still holding it because I feel it's a quality name, but you got to be patient with some of these things too.
This Train Tech, they have to do. I'm not familiar with it. They have to be more diversified than steel, right? As far as the industrial goes, because like I'm looking at this thing, and I mean it is sitting on a cliff here. If it's in that sector, you got 4 monthly lows surrounding that 367 area. So maybe look at it both ways. If it, okay, I'll try along here, but man, if that takes out 367, I mean, look at that. 4 monthly lows right in the same area. Robust.
This is a like nuts and bolts name. They do,
Okay.
the central heat, air conditioning.
Okay.
This group was
All
strong.
right.
This is
Different.
like building commercial and so forth, which was a very strong group for a while. And again, it's kind of fallen by the wayside with also the home builders, which you got the rate situation there. Anyway, I can go on, but
Okay. All right.
Benner wants to talk the dollar, and we haven't talked it for a while here. We have talked it, but just quickly here, dollar action is dictated by the TLT, by rates. So when you see the rates going higher, with the TLT long-term rates going higher, it is almost not 100. Nothing's 100%, but 98% of the time, the U.S. dollar is going to be very strong. It's all just money chases higher rates to a certain extent. So it's always, usually a stronger currency is usually always, dictated by rates. The rates in the US with the higher for longer, obviously since Powell has said that, the TLT has been in, just this fall. And that coincides with the US dollar's rise. Now, the question is, how much does the US dollar impact these multinational corporations? Because everything becomes relatively more expensive when you're buying things now in the US compared to their local currency. So international buyers coming into the US when you have a strong currency are now, looking at prices that are much higher. Does that eventually come into play? I'm going to throw it to Christian. I can throw it to you too, Joel. Does that eventually come into play here in 2025 that this strong US dollar is now starting to hit international sales?
I mean, I do, and I think it's also being reflected in these stocks that we're going over. All these stocks moving down this much. If you throw up a chart of like, what the dollar has been doing and what material stocks and what steel stocks have been doing, like there's definitely an impact. And I do think that it's somewhat being priced in, but we're also going to get earnings reports in a couple weeks. That's probably that was one of the first things yesterday. By the way, like it seemed like, oh my god, like on financial media. I heard them talk the dollar the most I've heard them talk about it in months, and I'm like, where have you guys been? The dollar has been moving like this for a good couple of months, but I do think that you're going to hear more about it in some of these conference calls, like the for the industrials and so forth. But I think it's being priced in to some extent. What you're seeing in these charts that are going in some of these sectors that are going down, I think it's definitely an issue. And those are the areas, the heavy conglomerates too, that are dealing with where they've got a lot of overseas operations. Absolutely, it's an impact. And we're seeing it. There's all these groups outside of tech and consumer discretionary look like they do not look like good charts. They look like they're breaking down. So to the extent, I think yes, this has been. And the more and more people talk about this too, which they are now, all of a sudden it seems like
Yeah.
that's also going to weigh on people's thoughts too, and a little bit of like overall market sentiment.
I mean, if
This
you're an
probably brings us
importer or
to Apple too,
exporter,
Joel.
yeah, importer or exporter, right? If you're an importer, it's good for you. If you're an
Good
exporter,
point.
yeah, it's bad for you. Let's go to Apple, and no one's buying iPhones in China. Just what was it? Slower sales and then discounts and everything really weighed on the market yesterday. Do they come in and buy the dip in Apple?
Well, they didn't yesterday.
No.
And it is a concern that we're losing one of the major leaders here. So Apple, and we've been talking about valuation being stretched on this thing for a long time, but it hasn't mattered. Right now, it's seeming to matter because they don't want to see their cash cow, which basically, you can talk as much about Tesla being a car company. Apple is a phone company. It really is. Half their sales come from the iPhone. They have other stuff they're cooking on, just like Tesla. But the majority of Apple sales is iPhones. So, I mean, when you see iPhone sales slowing, same thing with Tesla. You see the car sales slowing a little bit, and there's still a lot of money coming from cars for Tesla, most of it, almost all of it. Apple, big chunk of it, it's going to hit the stock. So, yesterday gets hit, obviously, and then today we get more, news that, it looks like sales were slowing over in China on the iPhone, and it's down another buck. Christian, what are your thoughts on this one?
Yeah, I mean, we're what 30 minutes into the broadcast, and it's I can't believe we haven't talked about Apple yet because it is the biggest stock in the indices, and it's going to move around. It's the biggest weight in the S&P. It's the biggest weight in the Qs. So absolutely, and that was some of the dynamics yesterday too. Was Apple was getting crushed yesterday, and that was weighing in on some of the index moves. But we did a great job with this yesterday with Tesla. We talked about the two levels in Tesla. So I just want to like bring up that comparison because I was mentioning 400. You have your eye, I think, on 335.
350. I was.
Sorry, 350.
Yeah.
And I mean, there's no question. It broke my level yesterday. And, so it's in this in between level with Tesla. I think the same thing with Apple. I'm going to give you two levels that I'm watching here. 245. So that's where I would want to be. Like, I would want to see buyers come back in and defend that level. They're not doing it yet. Right. If that doesn't, if it can't reclaim 245, the next level down I'm watching is 237. That lines up with a volume at price level that I've got. It also lines up with the 50-day moving average. So really this 237, 235 level is where I would be looking to buy the dip if it continues to dip, which is about 2.8% away.
This is like, well, yesterday when I was looking at the Tesla and you talked about the 400, wasn't too sure about anything there, and I just looked at this whole area in between that was very gappy. And when I see that kind of situation, I like to see if there's any corresponding daily lows. And it just didn't quite have the gas to get to 370.80. It only went to 370.04. So let's see it. It's trading up a little bit today. Let's a couple more lows in this area and see if it can turn back up. For Apple, I don't think I could throw a bid out there until the 240 area. You just had a monster move from 220 to 260. You had multiple lows at the 241, 242 area. Right now, you're at 42.85. So I'd sit back and wait for that. And also market conditions. And that's always happens with the iPhones and the cycles, and they come out and they say, "Oh, this is this," and they ordering less parts from some company, and they kill it, and then they come out with earnings, and then they beat, and they sold as many iPhones. So a lot of it is rumor and innuendo. Caught the market off guard yesterday, where they wanted, they were looking to sell these kind of stocks, but I would keep an eye on the 240 area in Apple.
Tony's ready in the background here, so let's go to our
Tony's
guest.
already here. We already did 35 minutes of
You
banter.
didn't want watching the clock. Yeah, he's hiding in the background here,
Man,
and he's ready to rock.
It's good, and he's over on the West Coast. Okay, let's get this going. Nope,
Joel
not
played
that.
the wrong one. Go.
All right, let's bring him to the stage. Tony Pawlawk, he's from Real Life Trading. How's it feel being the man in charge?
Man, it's great. I'll take it. There's one person in charge, might as well be yourself, right?
That's true.
Okay, Tony. So let's go back. I know we skipped you because of an options expiration, but the last time we had you on, you were like, you weren't that super bull. You weren't snorting, and your heels weren't in the ground and everything, and you're a little bit cautious in the market. Now, it hasn't been straight down. It's definitely been a choppy way down.
Yeah.
And if my memory serves me correctly, also, we're really not near your back up the truck levels and as far as buying. So just give us an update. Your overall market thoughts were pretty good last time. Let's hear them again.
Yeah. So there's a few things that I'm watching, and I'm going all the way out to a monthly chart. So I know. Does that even exist? I don't know. I don't know if anyone's ever heard of a monthly chart outside of a 1 minute and a 10-second ticker chart. So there are some interesting setups right now on the Qs where we're throwing in some bearish looking monthly candles. It's not the strongest thing I've ever seen after multiple run up of months, as we know. So we've got that, and then we've got SPY. It's not looking quite as bad on a monthly, but on a daily, we've got a Head and Shoulders that's just sitting on the verge of wanting to break the neckline. And so there's a few things that I'm watching. I still think that SPY could be pushing into its. Let me pull up a chart here over here so I can speak.
Have you ever shared on StreamYard?
I don't think so, but I can.
Okay, you're a pretty smart guy there, being trained by Jeremy.
Go down to present, and then you pick what you want to present.
Awesome.
And then an entire screen, is there just one screen you want to, that won't show your like 7-figure bank accounts and everything?
I know, that's what I
was gonna say, we can show those. Let's see here. So
he's getting it figured out.
I'll get it figured out.
Okay. If not, it should pop up on mine.
There we go.
Okay. When it pops up on mine, then I can put it up there.
There we go.
Oh, look at this guy! I know he was trained by Jeremy. He was trained by Jeremy Newsom. I mean, go ahead.
So again, here on SPY, let me clean this thing up a little bit. So I've got a left shoulder ahead and a right shoulder over here, potentially forming. So I'm watching this baseline. The bulls are trying to hold. If this breaks, it kind of takes me down into my level that I'm wanting to get to here, around 555 to 560. This is a big time spot for SPY that I am excited for it to get to. And then I think we could have some sort of a rally out of here if it wants to get there. But watching that guy very, very closely to see what it does. It kind of wicked into it yesterday. RLT's community here, we called the right shoulder. We didn't get in right at this top. As soon as it put in this gap down, we went ahead and bought puts just because we figured this levels we were watching already and made sense. We got that gap down. We bought puts. And so we just exited those puts yesterday, and that was a nice little winner. Now we're just kind of waiting to see where we want to go from here. So looking either for a strong breakdown, a bounce, load back into some more puts to take it down into our level, or seeing if this is going to try to reverse and squeeze bears out. Because if we start getting higher than 600, I'd say this could actually have quite a bit of a run on it with the bears that are trapped off of that low that just came in off of yesterday. So that's kind of what I've got over there on SPY. And then the Qs, the candle I was telling you about is this guy right here. I mean, that is that normally doesn't turn out too well when you put a candle like this on a monthly chart. So it's going to take some time to play out, though. This is a monthly chart. It could be 3 or 4 months before you see any follow through.
You're talking about the December, because I mean it was still a green candle for the month, right? Because you opened at 511.01, closed at 511.23. You just don't like that it backed off 29 handles from the high, right?
I want to see highs close with strength, right? If we're going to claim new all-time highs, I want to see the bulls continue to hold that going into the end of the month. That's a sign of strength. So the fact that we came up here and then the bulls could not hold any of these dips. And if we zoom in on a daily chart, we can see where the bulls tried, right? We tried to find some buyers and they couldn't hold that. So it just continued to just get beat. And we already had the buyers here that stepped in previously off of that higher low, came down, beat that, pulled all the way, but really back into like a weekly level for the buyers to come back in. It was the 10 EMA, I'm pretty sure, on a weekly. And the buyer stepped in hard and then just gave that right back up as well. And so I do think that some bulls are going to try to step in here soon. Like I said, it could take quite a few months to play out. And if we start getting some strong closures up above the high, we keep on running, in my opinion. So the bears are really going to have to start defending 540 and 530-ish area. So if we get there, expect bears to try to hold that level. But at the moment right now on a monthly chart, the doors are opened. And I mean, we're off the charts right now on the RSI on a monthly, looking pretty strong. I would say at least 485 makes sense for some retests to see if these bulls want to come back and play. But up here is, in my opinion, it's a pretty tough place to be a buyer based off of what this chart's showing me.
So you think a little maybe early weakness here and then the buyers reemerge again?
Most likely. Yeah.
That's where I'm going with too. I'm almost that same opinion here. I'm worried everybody else is the same opinion too, but you know what? CNBC, they were full bearish last night. So we may be okay, Tony, with a little bit of weakness and then the buyers reemerge. I don't see them just being able to kill this bull market. I just don't see it. With the AI theme going, so many people were sitting on so much cash and bonds not doing great here. I mean, what's I guess you can sit there in your bonds and get 4% or whatever, but when you're seeing the S&Ps go up 24% last year and you're sitting your bonds at 4 or 5, you're probably like, wow, that was a bad move. So I think there's still a lot of FOMO out here. I think there's a lot of reasons to still stay bullish longer term, even though, like you were saying, technically we might be overbought right now.
Yep. Yeah, there's room to go down, but it's going to take a lot more. We're going to need some type of catalyst to really get this to move down to levels that I believe the markets want to get to over the next 2 years, which is, like, for me, my long-term investment account buying is on the Qs. I'm kind of looking more like 440 to 380 bucks down here. That could take a long time if we ever get there.
Yeah,
we'll never get there.
Well, never say never. We know
never
stuff
say never,
happens.
right?
You get those opportunities, and you're ready.
I never
say
thing.
never anymore.
I said the same thing about 260, 220 area years ago, and it gave us that chance. And so it just might take 5 years. Who knows?
So Tony, I have a question for you. So let's say you start to get that signal of, hey, you think that this thing is going to break. You're either going to put on, what are you going to put on, an option trade, I would assume, or to execute the downside?
Correct. I always short by buying puts. So instead of me shorting the shares, I buy puts because it caps my downside, right? I get all the leverage of the upside and I don't have any of the leverage of the downside. So I always short with puts. You just need to have a better idea of how far out in the expiration to go so you don't get burned and which strike to choose. Too many people choose the cheapest option and that burns them. You actually need to spend some money on the option and give yourself an option that's worth having. So that'd be my one tip for you guys. But yes, I'd be doing it with put options.
Okay. And if you're making a directional, is it going to be purely a directional play, or are you going to pair that up with something else, or or is it just mainly, hey, we're looking for downside, we're looking for a particular target to the downside, and then we'll reassess?
So it's a combo of both. I would say it all depends on how fast the trade is working and how well it's working. So options time is not on my side. So starting out, it's a pure directional play. I'm going to do my best to read these markets, plan my entries, and if it gives me that opportunity where I can lose small and win big, meaning I know I'm wrong if it gets to here. And so, I'll throw in an example here. So I think we probably get another move back up higher through here. So if I can get some sort of short back up on the Qs around like 520 to 530 area, like that area I was talking about on a daily chart, if I get my setup on that, I know I'm wrong if we get up above 540. And so here I can just it's going to look something like this. All right, sorry, this is taking a little too long.
So do you start at 520 and just keep lopping it on, or like it gets to 520 and then like you're kind of on alert? Like,
I'm
okay,
on
let's
alert.
see.
Yeah.
Oh, okay.
Yeah, I'm on alert at 520. So when it comes to buying the dip, I'll leg in. When it comes to shorting against trends, I want to watch. I want to see the bulls break. I want to see the bulls commit and then have the sentiment show that they've lost control. So I need some sort of trigger mechanism, so to say, to get into my bearish positions when I'm going against this strong trend. Because if I'm going to leg in, I'm going to be legging in all the way up to 600 because this thing could it's bullish, right? So that's a bad strategy to be in, to be able to lose small, win big. That's opening the door to lose big, maybe win. So when it gets into this area, I'm on alert. Like you said, I'm going to start watching for the bears now to step in. I'm going to watch for the sentiment to break. And I do that on smaller time frames, the hourly usually. So if I've got this type of risk reward where if I'm wrong, I lose $500. And if I'm right, because it's an option, I could make, $5,000. If I can 10x my money on that, I play the directional trade, right? But if the trade, let's say this trade starts to work, but then it's just hanging out for quite a while, well, now I can start comboing this in and turning it into some other opportunities and possibly make some money while I'm waiting. And that all has to do with the setup. And so a lot of that could be turning in some calendar spreads, so selling some shorter term puts against my longer term put. And again, most people, they'll buy a put 3 days out here. I'll be buying a put like 4 or 5 months out here.
That's the point. That's the fantastic point there, Tony, because everybody, especially with the 0, days to expiration, weeklies, there's so much focus in there. And that stuff, if you're a buyer of those contracts, you're on the wrong side of it, because most of that stuff, the time is working completely against you, where you're giving yourself enough time to allow the trade to work out and not have that time premium erode on you. I mean, there's so much erosion that happens in those last few days. You're always buying 2-3 days out. You're taking max erosion on that time premium all the time. So, I mean, Tony, just fantastic points you're making here.
Yeah, man. That's 100% true.
How do you trade 0-day options with
I was going to ask that, Christian.
So 0-day options, there's a reason
sell them.
Yeah, you can sell them. There's a reason why they play out so well. For me, a few of my rules, I've got to have very specific trigger points, and these are going to be on a smaller time frame. So the 5-minute is going to give me price action and information and sentiment for the next hour, right? So if I'm going to be in and out of a trade in 5 minutes, I don't need to be on the daily chart, because that is going to give me sentiment over the next 3 to 4 weeks. So daily chart, I use it for levels, but it doesn't really help me out much. So I'm going to get down into a time zone where it's like, okay, I'm going to get sentiment here on this one, understanding that this could be bearish for an hour and then overall be bullish, right? So you have to have the right perception. You need a trigger point to let you know where it's time to get in. So you have to time it up really well. You got to be able to read the charts to be able to know, okay, I'm not right here, so I can cut it. And then even when I do get in on my trigger point and I am right, I have a very specific timeline on it. So I have about 15 to 30 minutes for it to hit my target. After that, I start playing defense. It erodes very, very quickly. And so I set myself up for moves like this, something where I can have a target play. And if it can run, I can 5x my money and I can bounce out. And I understand very quickly when it's not running, when it's not working, and I start reducing risk. So it's a tightrope to walk with these 0 DTEs if you're going to buy them. In other words, sell them. There's risk with that. That's a much easier play. But the number one issue people have is they can't diagnose the markets. everyone is focused on strategies, and strategies are needed to make money. They're like tools, right? But if you show up and your car doesn't start in the morning, I was going to share this, but that's fine. If you show up and your car doesn't start, like, you don't just go grab a pair of pliers. A pair of pliers in itself does no good until you figure out why that car doesn't start. Once you figure out my battery's dead, now you grab the tool to take the battery off, and that tool is very useful. Strategies are the exact same thing. If you can't figure out when to apply that strategy is worthless to you. If you can figure out when to apply that strategy and why, now that strategy becomes very, very effective and you can make money. So everyone's out here, they're kind of missing the point of strategies. I could give you the world's greatest zero DTE strategy, and 99% of the people would lose money on it because they have no idea when to apply it. And if you're waiting on the strategy to tell you when to apply it, it's a lagging indicator, and you're most likely late to the party. You're buying puts here, and your risk is large and your reward is usually small because it's late. You've got to be able to diagnose and be ahead of these markets. You've got to be waiting for this move. When it's doing this, I'm waiting for that move down, and I'm having certain triggers to let me know when it's time to get in, to let me know. So we've got to get in before the move happens so that we can make money during the move, and we can get out here when everyone else is looking to get in. That's a
You know what you do when your car doesn't start?
What's that?
You call AAA.
You call someone else to figure it out, right?
Yeah. He's got the Jeremy laugh. I love it. Okay. One more chart.
Yeah.
And I know you boys and girls over at RLT are Tesla lovers.
Oh yeah.
And it got up there, it pulled back here, and I saw Jeremy. He dipped his toe in the water. He was like, "I sold. I'm
more?
back in." This is, I think, yesterday. I don't know if he's legging into it or something.
Yeah.
But I mean, you talk about a stock here in no man's land. Give us your. Let's go long term. I love this monthly chart. I love this weekly chart stuff. It's different. Talk about Tesla.
Yeah, let's start long term and work our way down. And so for me, you're 100% right on a monthly chart. We're sitting in no man's land. It could get bought up because there's buying opportunities on a daily we'll look at here in a second. But on a monthly chart, we broke into new highs. And what did I just say earlier? It's like, if we claim new highs, I want to see the bulls hold those highs, and then we can pull back. We didn't hold the high. Is this the end of the world? Is it the end of the world for Qs? No, but it is something to look at. And there's little warning signals left and right here on the markets. If you can look at what the markets are telling you beforehand, you'll be like a fortune teller. People are like, how did you know? It's like, I just know what to look for. There's little clues in the markets all over the place if you can just find them. And this is clue number one. Okay, not the end of the world. Tesla's not done. I am looking to buy the dip. But this is something that's saying, hey, if the bulls were here, we'd be strongly claiming this ground. So now that we revisit that ground, bears could be starting to step in. Bulls could be trying to exit now, going, all right, we didn't get the close we want. Time to take profits. That could be a warning sign here. So I am watching very heavily, like 415 area is going to be an important level. Doesn't mean we're going to go bearish. Yeah. All right, I got to turn off this thing here.
No, that's okay, because I looked at it and earlier I looked at that as as major support, and then several days. And Tesla will do it, even as being as volatile stock as it is. It will. And Dennis stuck with it. When it just kind of lulled us to sleep in that 180 area. Yeah, it's at 6 months. So I'm not saying it's going to take 6 months for the next move, but all right. Well, you guys know him. He's Tony Pawlawk. He's over there at Real Life Trading, way out there on the West Coast, getting up bright and early for us with a big old spot. No wonder Jeremy sold the company to you. I mean, all you do is laugh and smile and try and are you like, is you a Jeremy clone? I mean, I don't know. Even a laugh.
The one thing I've learned is that you've got to be positive in the markets, right? You've got to be the person that's willing to stand back up and keep going, because if not, it can get depressing and you can get down. You've got to keep smiling and keep going, right? You've got to be the player that's, if he's playing baseball himself, he throws the ball up, he swings, he misses, he swings, he misses, he swings, and he goes, I didn't know I was such a good pitcher, right? Like, that's the mindset you got to have to be successful in the markets. And so smile.
I love
And
it.
what's there
I
not
love
to smile about? I worked my whole life to be able to trade full time, and I'm trading full time now, right? So I try not to take that for granted. Smile.
Okay.
Smile
All
more.
right, Tony. All right. We'll talk to you again in a couple of weeks. Tony
See you guys.
Pawlawk, CEO of Real Life Trading. Okay, guys. Where do we go now? Oh, I know what Dennis wants to talk about. He wants to talk about the efficient market hypothesis.
Oh gosh. Or the inefficient market hypothesis with Carvana. I know where you're going here too. The craziness of this. Okay, so 10 o'clock yesterday, Hindenburg comes out with the report, and Carvana gets hit a bit on the report and then bounces right back. So we know Hindenburg, obviously, short seller, has come out with some fantastic calls before. They're well respected in the industry. Stock comes out 10 o'clock, gets hammered down about $12, and then they just rally it. Well, actually, it was up. So it got hammered more than that because it was trading up around 210. And then they hit it all the way down like 188. But then it bounced back. It came back. So we're talking about the 10 o'clock bar. It came back fairly quickly. And then they just kind of ignored the report for the most part. You know, like, okay, well, they don't believe this report. But then last night, for whatever reason, I don't know, it's like they were just delayed reaction or whatever. But at one point last night, Carvana lost another 17 points. I don't know if somebody said something, but I was searching for news. I'm like, somebody was saying, oh, it's the Hindenburg report. I was like, that report came out at 10 a.m. I'm like, they were not going to have a reaction to that, 8 hours later. I mean, that already had the reaction. But this hit 182 last night. It was down 17 more points. It's bounced now back to 192. So I don't know if it's this nervous Nellies in here. Like maybe there were Johnny-come-latelys that are like reading it again and reading more into it. But completely the bigger reaction came 8 hours after the report. So there had to be somebody else in chat. If you know something else that happened last night, let me know. I was searching around. There really wasn't. JP Morgan actually defended it this morning. I don't know. What are your thoughts here on this Carvana action, Christian?
Well, so when these moves are happening, where you're seeing these, because a lot of these, it's what Robinhood and IBKR and so forth. How is it on a lot of volume, or is it just someone?
This is
like
last night on
seller?
huge volume. So this wasn't on Robinhood and IBKR. This was at 6 o'clock last night. So this was when the regular session was open. We're not talking overnight trading. This was heavy volume. Carvana, like serious volume last night. So we're talking from started selling off around just after the close. And then I think around 7 o'clock, when all of the exchanges are open, not on Robinhood, the regular exchanges are open. NASDAQ, ARCA, all the after hours exchanges are open. The stock was trading down 17 points. Somebody just wanted the hell out. Somebody, and again, to Christian's point, there's always less liquidity after hours. Always, always, always. But on a stock like Carvana, you can pretty much get in and out fairly easily here. And, we're down another 7 points here again today. So, I mean, obviously somebody is very nervous and multiple people very nervous about to still keep selling it. I just found it very weird that the bigger move actually came like 8 or 10 hours after the report. But it's great points you're making. Liquidity is always less after hours, and you can get more violent moves. But this was on serious volume. Joel could look at the volume. There was serious volume on Carvana between 5 p.m. and 8 p.m. last night.
Yeah. You know what? Can I say maybe a margin clerk was a little bit late getting to this one?
You sometimes see that after hours, and it's a good point. I don't know if that was the case here, but you do sometimes see this where you see, and I know this happens because I've been bought in before, not on margin, but when they can't locate a stock, IBKR would give you the warning and say, look, you got a warning. Or even when we were at GS, we'd get the email and say, look, you got to buy this thing in. If you don't buy it in by 4, we'll buy it in after hours for you. You never want to get bought in after hours because it can get really ugly with the liquidity. So you always heed that warning and buy your stock back when you're short. They can't locate it. So margin calls do happen. And if they don't, if the client doesn't get out, and usually a lot of these brokers are pretty good at getting them out before the close, but in some cases they don't. They can be some margin selling after hours where the broker is actually selling it for you. I don't know if this was the case on Carvana because it did not like it had a big fall. It wasn't like, you often see margin calls when the stock falls 30% and people are really hit. It really wasn't down hardly at all yesterday. It really took the fall after the fact. So it's interesting, just something to note.
Okay, coming up on the 9 o'clock hour. Let's see here. Do we, Christian? You wanna throw any analyst moves towards it at us before we wrap things up today?
Well, we did have as we were talking earlier, Rivian came out with deliveries, and it looks like they actually beat. This is kind of an interesting stock. I've looked at this a couple times. A lot of starts and stops with this stock. So looking at where it's trading and on the 1 hour pre-market, it's trading up to about $14. So you get a nice pop. But we've seen these, and it kind of fizzles. I would so for this stock, other than this, like an announcement that we have this morning on the deliveries, which they beat, which is
They
pretty
did.
interesting. But I'm watching like 1488. I think is something that I would like to see it kind of take the trend and start to really move to the upside rather than just going sideways in this name. Uh, what about Dennis? What do you think about the reviews? I don't know if you guys have talked
I've
about
liked
the
the
stock
10 level for a while, and I've talked about this as support, and we've bounced off there a million times, So we have, and we've had this market that some of these story stocks from 2020, 2021, 2022 have started turning around. So I don't mind the Rivian story here. Valuation still obviously, tough. I've said I thought Rivian could be a number 2 player of pure EV makers. We know the bigger guns are going to be coming, but you got a lot of other EV makers now here too. Can they be number 2 in the U.S. of pure EV? Just like not making other gasoline engines, possibly. I don't think it's a zero. Like Lucid, I think would be a zero if it wasn't for the Saudis. I think a lot of these other ones like Fisker, have been in trouble. I feel like the trucks are awesome. I feel like they may eventually find their way. But it's still like when you look at valuation, you look, do I want to buy Rivian over Tesla? I mean, I don't know. I have a trouble to think I'm going to take some of my Tesla investment and put it into Rivian.
I'm looking at this one. It hit 1472. That was on Tuesday. I'm finally getting the days right here. Still a buck away from that. So I mean, if you're looking to follow through the pre-market high stands at 1410. So that's a level. But what stands out to me on this one, the monthly doesn't give you much, but it's like there definitely some big boys stepped up at 10. I mean, they're not your Ma's and Pa's. But all the way in October and for almost all of November, they stacked up at 10, right? Well, then they realized, well, I can't get any more really enough of the stock at 10. And they started this at 13. Now, it's not nearly the same kind of base that you had at 10. But for a longer term play, I'd like to see it come down to the slower 13 area again, and then see if it can form another solid base, maybe make a blast up to 16, then make a higher base, something like that. But your 2-day high in Rivian, and I like they're decent looking cars too. Is 1472. So that's it. 902. Dennis, any final thoughts? Christian's final thoughts before
I think, and people are asking, what's your acronym? I think we're going to work on them over the weekend. I've got some ideas. I haven't finished it yet, so I am planning on coming up with an acronym. Hopefully Monday, if not Tuesday, we'll reveal our acronyms. Joel's going to come up with one too. So
I don't know. I'm just not.
Joel doesn't want to participate. You got to participate in some way.
They're all going to be on the short side.
Well, you can do that. That's okay. Have your acronym short, and it's all just shorts. I mean, you could do that too. Or, there's different ideas. I've got a few ideas here. I do think, I'm going to say this year, I don't think it's going to be, as simple as, we're buying and we're going up 25, 30% of the S&P and we're all going to be happy. I may be wrong, but I think it's going to be a tougher year. I think it's going to be a choppy. I think it's going to have some wild swings. I think we're going to be up 5%, down 5%, all over the place. I know, lots of people end the year target 7,000. I wouldn't be surprised if we actually, don't, end up 10, 15%. I don't think we're going to end up down on the year, but I think it's going to be a very choppy year. I don't think it's going to be smooth sailing.
Boom. Just this AMD, and then I'll let you give that news real quick, Christian. I mean, AMD, I know Triple D's nibbling down here. I mean, you've had 3 monthly red candles in a row. Let's maybe wait for a monthly. I mean, if you're buying it here, You got you hoping this 118 holds. That's $3 away. We're starting a new month, a new candle closed at 120.79 from last month. So you establish a nice bid over 121, and I'm just talking 2, 3, 4 days. Then maybe you got a longer term bottom here in AMD. Christian,
Trade
what was that?
investing, just to add to this, are two completely different animals. So when I'm investing, I'm going to say something that's going to piss a lot of people off. I don't really care about the chart. I'm looking at buying good companies with stories at reasonable valuations. When I'm trading, I absolutely care about the chart. I'm looking, for stocks that are getting momentum and stuff's going. Christian's, theme almost. Like I look, if I don't know, and I know a lot of the charts, a lot of times I don't have to look at them. But if it's a stock that I don't know and I bring up the chart, is it an uptrend or a downtrend? If it's an uptrend, I'm more prone to buy it as a trade. As an investor, think about when I was buying Tesla at 180. That stock, everybody was telling me it's the worst chart out there, Dennis. This is the only stock in the Mag 7 that is potentially, this is the only one that's down on the year. Why would you ever buy this? You're an idiot, Dennis. You're so dumb. That was like literally my timeline for 5 months. 5 months of heat because it never went anywhere. But you know what? It worked itself out. Even when I bought NVIDIA, it was down from 520. People are like, it's broken now. It's broken. It's went from 100 to 500, which is 10 to 50. But you know what? I think about what the story, what's going to carry this. I think about what the potential is for a turnaround, and not necessarily, I'm not always buying just stocks in the doghouse either. Sometimes I buy them when they're hot too. But I'm always thinking more about, where is the fundamentals going, not where they are. This is where value investing, growth investing are two different animals. Growth investors are worried about where the fundamentals are going. Value investors are worried about where the fundamentals currently are. And I think this market's been growth for a long time. And if you know that the fundamentals, if you don't, nobody knows anything, but if you think the fundamentals are getting better, if you think, that, hey, there's a lot of revenue sources coming from different places, like in the NVIDIA case, NVIDIA was one of the easiest buys a year ago. It really was. It was why it was the N in my NASA. I'm like, AI is going to be a story all through 2024. The thing's trading like 26 times forward earnings if we believe those projections, which ended up being very light. But they kept going on. It's not about where you're going. It's about where you were. And all those people coming on, people on our show saying, like that, it's trading 125 times earnings. How can you buy that? Because I don't care about the past earnings. I care about the future earnings. So stop looking at the past and look more at the future, and you'll become a better investor. Everybody is silent on that.
No, I like that. Okay. All right, folks. That's it for today. Pre-market prep. We'll be back at Monday, bright and early, 8 a.m. Everyone have a good weekend and go Lions. Beat those Vikings.